Hi guys, this is Mark Shawson, the Pattern Trader. As you guys know, if you've been following me for any length of time, I've been absolutely hitting it out of the park with a lot of my trades over the last 3 or 4 months. Actually, after the last 18 months or so, it's been a bang-up period, if you will. But I never know, how you guys are doing. If you guys are following my trades, if you follow my trades, how they're working out. So I got a particular charge when I received an email from Emilio. I'm just going to take a moment to read it from you. Emilio says, to Mark Shawson trades have already paid my subscription and then some in just 2 days. In Emilio's account here, it shows that he made about $5,000 in a gold trade and about $10,000 in a short dollar-yen trade. And as he said, just two of his trades have made up for the entire elite subscription that he signed up for. So Emilio, good on you. And actually the dollar-yen trade that you referenced that we did so well in is kind of a lead up to what I want to talk about today. So at the end of April, the US dollar versus the Japanese yen in the entire week put on a range of 50 pips. This is about the third of a normal range week. It was a little benign inside week bar. But as I alerted our members at that time, these little innocent inside bars usually or can be a huge catalyst for a reversal in trend. And because of prior patterns that occurred in dollar yen that were alerting me that dollar yen is principally going to go to the downside, to my mind, that little inside bar was going to be a huge catalyst for a reversal. I'm going to go to the charts in just a moment and show you exactly what I'm talking about. And the reason I'm talking about this inside bar is I think that we may have an opportunity sizing up in the US stock indexes, which have barreled to all-time highs in the last couple of weeks. Now, last week, the NASDAQ, the proxy for the tech sector in the United States, made an all-time new high. The S&P 500 made an all-time new high. But the Dow Jones Industrials stopped short and didn't go and make an all-time new high. Now, in the week following, we're seeing these inside day bars forming on the daily charts in the S&P and the Dow Jones. And as I said, sometimes these little inside bars can be catalysts for a nice reversal in trend where you can take a huge chunk of change out of the market very quickly. So I'm going to go to the charts and show you exactly what I'm talking about. Before I dive into the charts, I just wanted to share an email with you that I sent to our members on Sunday, April 21st. In this chart, I was looking at the US dollar versus the Japanese yen. You can see that this is a weekly chart, and I was looking at some patterns and structures within the market. And what I'm really alerting you today is this very narrow range bar. You can see that that bar is the narrowest range, I think, in the last 3 or 4 years. But to my mind, was an indication of a catalyst for a change in direction in the dollar yen. And I'm going to show you exactly what I'm talking about on the charts in just a moment. Based on my perception of that as a reversal, I advised our members to sell the dollar yen short at 111.61, and thereafter dollar yen crashed about 400 pips. Now I'm seeing an opportunity in another instrument that could have the same kind of reversal. This is a chart of the US dollar versus the Japanese yen on a weekly time frame where each one of these price bars represents 1 week in time. And this is where I advised our members to sell short the US dollar versus the Japanese yen on a sell stop just under that inside narrow range weekly bar at a price of 111.61. And you can see thereafter dollar yen crashed about 400 pips to 107.31. So this is an indication of how these benign, innocent-looking, narrow-range bars can be a catalyst for a reversal. Now, in and of themselves, you could get a giant move one way or the other. Now, the reason I thought this was going to go lower was that inside or narrow range bar coincided with another resistance area, effectively making this a double top resistance area within the cadence of a descending triangle price pattern. So I don't want to overwhelm you here, but I look at these inside bars within the context of the prevailing trend from this double bottom high. I suspected that dollar yen is going to be on balance going lower. And so that inside narrow range bar in context with this descending pattern, in context with the double top, in context with the declining phase of the market, alerted me that this, again, very benign looking inside bar, you can see that this entire range for the entire week was about 50 pips from about 111.75 to about 112.25. And that to me was an indication that we would have a giant reversal in this market. Now I'm going to show you another chart that is perhaps setting up the same possibility. This is a daily chart of the S&P 500. This is the major stock index in the United States. And as you can see, we're currently trading at a major resistance zone in the S&P 500. In fact, last week we cleared this resistance zone and went on to all-time new highs. But you can see after we went on to new highs, you can see this itty-bitty little daily bar. That's the Sunday range. It can be a little bit misleading, but you can see that very narrow range bar was then followed by a sell-off. And then again today you see another inside bar. And what I mean by an inside bar is that the trading range from high to low of today's trading session was literally within the high and low of yesterday's trading session. So we call this an inside trading bar. The significance of these inside bars, to my mind, especially when you look at a market that's running up, what this tells me is that this ran out of momentum, that this new high was not followed by a new high, and we have this coiling effect where you're building up energy. And so now it's anybody's guess as to where the energy will release. So these coil bars, to my mind, I always use the metaphor, the comparison of a beach ball. So picture, if you will, if you put your hand on a beach ball, you compress it, you suppress it underwater, you keep pushing it underwater, and then you let your hand off. What happens? The energy just uncoils. And this is what happens when you release from an inside bar, where effectively today all you did was have a suppression of energy, a coiling of energy. Now you can have a release of energy from this inside bar, either higher or lower. And right now I'm speculating, because we're in this major resistance area, that the next release of energy could be swiftly followed by a move to the downside. The nice thing about the inside bar is if you're wrong, your risk is very small. So what I'm recommending to our members is to put a sell stop under today's low at 29.70, and then put your buy stop, or your stop loss rather, at 29.92, which is a hair above today's high. So this is your risk, and I would anticipate that you could have this kind of reward. So typically I'm looking for 2 to 3 to 1 risk reward on my trade, and I think this kind of trade could fulfill that kind of parameter. If we kind of draw this range, I could see a pullback to this upper level at least, and this inside bar could be the catalyst for that. So again, these little benign, innocent things where the move stops and then quickly reverses the other way takes a lot of people by surprise. But before they do that, they store energy. So I hope this was very helpful to you. I hope this strategy will help you in the future. We also have a free booklet entitled 21 Power Strategies. So I encourage you to request a copy of our 21 Power Strategies. So with that said, I wish you a healthy and prosperous trading day, and I'll see you next time.